Hey, welcome back, everyone. We're going to go over taxes today, specifically deductions. We're just going to go through a very big, long list of course, not all of the deductions, there's always more, but the most common tax deductions that you should be making sure that you're filing for at the end of the year. And I do want to be very clear, this is not legal advice, this is not tax advice. Don't take it as so. This is just me telling you what I feel I've found through my research and my own personal experience. Now, what the IRS is going to be looking at with all of these expenses, as well as any additional things that you want to deduct from your taxable income, it needs to be ordinary and necessary. Those are like their catchphrase keywords. It's got to be an ordinary expense for your business and it's got to be necessary for your business. But within that realm, there's a lot of wiggle room. So we'll start right off the bat with startup costs. Anything that you incur as an expense for starting up your business, such as purchasing tools, purchasing CRM software, paying to have your LLC formed, etc. All of those expenses up to a certain amount, and this is where you need to check with your own CPA, but up to a certain amount, most of those startup expenses are deductible. Another great one's going to be inventory. If you are building an inventory, part or all of the purchase cost of that inventory that you purchase is also going to be tax deductible. Same with tools, it's going to be part of the purchase cost or all of it. It depends on how your CPA files things, but the IRS does have some new policies in place that help you deduct 100% rather than just a percentage. Also, your insurance, and that's your general liability insurance, your commercial insurance, your workers' comp insurance, any insurance costs that your business incurs, those are also tax deductible. Same thing with marketing, and that includes all expenses for marketing. So, whether you're buying ads or you're ordering business cards or brochures, or you're paying fees on websites to post your business to get some work, all of those marketing expenses are also going to be tax deductible. And similar to how I mentioned with the startup costs, all the software that you buy. So if you're using Jobber or some other CRM, if you're paying for QuickBooks, if you're paying for estimating software, any software that you're purchasing for your business that's ordinary and necessary for running your business, tax deductible. And let's talk about utilities. And in fact, let's just call it the home office deduction in general. So I'm in my home office right now. It's about 15% of the square footage of my home. What that means is all of the money that's required to maintain and keep this home going, those expenses, 15% of them are deductible for my business. So that means 15% of my electric bill, my water bill, the garbage. In fact, for me, it would be more than 15% if you can show that your business incurs an even larger portion of the expense. I doubled the number of trash cans that I have for my business. So half of the cost that I'm paying for trash service here is for the business only. So I can deduct that as long as I can show that they're for the business. But 15% of also, let's say, repairs that have to be done to this house. It doesn't matter what part of the house they're on. If they're required for the house, then they're required for your business because the house is required for the business. Also, as far as your home office, for example, I have my own internet service just for the business. So I'm going to deduct 100% of that cost for the business. And as long as we're on the subject of home office, that also includes your computer, your printer, all of the paperwork that you have to buy, files, folders, ink for your printers, all of those office expenses. If it's money that you're spending directly to supply and outfit and equip your office, those are also deductible. Education is another good one. So if you're taking seminars, if you're taking courses, and that whether that be accredited or non-accredited courses, if they're related to your business, if they're ordinary and necessary, anything that falls under education, if it's for your business, is deductible. That's also going to include if you're going out to get, let's say, your contractor's license and you have to buy books in order to take the test. The cost of the test, the cost of applying for the license, the cost of your bond that you have to buy because you have to be bonded to get the license. All of that educational stuff is also tax deductible. And then moving on to your vehicle, if you purchase the vehicle for the business specifically, you can deduct with the new IRS rules up to 100% of the value of that vehicle the year that you buy it. It was before that you had to depreciate that vehicle over the years, and that still can be the case. But with Section 179, you can now depreciate up to 100% of the value of the equipment and or vehicles that you buy for your business. Also, any money that you spend on maintaining that vehicle is deductible, and of course, your mileage itself, as far as the gas that you use and the maintenance fees involved. You can either do a standard rate where you figure out your mileage, and then I believe right now it's about 65 cents per mile you can deduct. Or if you keep accurate records and you can show that you spent more than 65 cents per mile, then you can deduct the actual cost above and beyond that. Your bank fees as well. Any fee. So if you're paying $20 a month as some sort of fee for your checking account, that $20 a month is a tax deduction. Another really big deduction is going to be travel expenses. So this could be for seminars that you travel to, conferences, conventions, or anything at all that's related to your actual work. And I'll give you a quick example. I've considered expanding into Phoenix before, and I'm not doing that at the moment. But if I want to do some research on expanding into Phoenix, then when I take my trip to Phoenix, I can deduct the airfare to get to Phoenix, the hotels, the meals, the lodging, the taxes, and the tips, all of that, almost every expense of that entire trip. If I choose to go to Phoenix for, say, 3 days to talk to 27 different property managers and feel out the market, that would be a tax deductible expense as well. And if I happen to bring my family along with me, their meals are not tax deductible. However, as long as they can stay in the same lodging that I'm staying in and we're all driving in the same car, the rest of the trip is still tax deductible. And if we happen to go to a museum or two while we're there or have a little bit of fun, the trip itself is still tax deductible as long as the purpose of the trip is for business. And then there's employee and subcontractor pay. These should be 100% tax deductible all the time, but a lot of people don't realize that they are. Bad debts as well. So if you have clients who don't pay you, say at the end of the year, you've got $1,500 worth of invoices you sent out that never did get paid, that you can't get the money back for, you can deduct those from your taxes as well. Health insurance is another really nice one. So everything that you pay, all your premiums for your health insurance are tax deductible. And if you're a self-employed business owner, and let's say your spouse has a job and your spouse pays for health insurance, as long as you are listed on that health insurance plan, the entire cost of the entire health insurance plan that your spouse has with their job is deductible on your taxes. And the same thing with all other medical expenses. So this would include co-pays, buying stuff at the pharmacy, etc. If it's a medical expense, it is tax deductible. Meals are another big one. Now, there was a time when you could deduct meals and entertainment for almost anything. They've basically gotten rid of that. However, you can deduct meals at the very least at a 50% rate. So half the cost of the meal you can deduct as long as you and an employee or a professional associate are present at the meal and business is discussed over the meal. Your retirement savings, in terms of if they're going into a 401k or a traditional IRA, whatever you're putting into that system annually, is tax deductible now. However, I'm going to give something that I'm going to call, this is my opinion, okay? And people disagree on everything in the world. But in my opinion, if you're going to be putting away money for retirement, I highly suggest Roth IRAs rather than traditional 401ks or traditional IRAs in general. Now, those are tax deductible this year, meaning if you put in $5,000 this year, then you can deduct $5,000 from your taxable income before they apply a tax to it. That does help you out this year. However, keep in mind, with a traditional 401k, all the money you put in now that you don't pay taxes on, that initial investment that you actually put in, when you go to pull that out at retirement, you're not only going to pay taxes on all of the money that your 401k earned over the years, but you're also going to pay the taxes that you didn't pay this year on the money that you put in, as opposed to a Roth IRA. With a Roth IRA, the money that you put in is not tax deductible. So if I put 5 grand into a Roth IRA this year, I don't get to make any deductions at all from my taxes for that 5 grand. However, let's say that 5 grand by the time I retire grows into 15 grand and I make $10,000 off of just what I invested this year. That entire 10,000 is all tax deductible, every penny of it. So you don't get the tax savings this year. But like I said, with the 401k, yeah, you don't pay taxes on what you put in this year. But when you pull that out later, you pay taxes on all of it, the initial investment and the earnings. So the Roth IRA, you do pay taxes this year. It doesn't give you a deduction, but all the money it makes between now and when you retire, that all comes out tax free in the future when you retire. Professional services are also tax deductible. So if you hire a lawyer, if you hire an accountant, any professional services that you hire out that again are ordinary and necessary for your business are also tax deductible. And then finally, the big one, I believe this one was only passed in 2022, but it's called the 20% pass through QBI. So any qualified trades, and there's a lot of different ways they define this, but for the most part, if you're trying to run a handyman business, you are going to qualify. This is for service based businesses mostly. One of the parts of the definition that they use to try to figure out if you qualify is going to be whether or not your business relies on your personal reputation in order to run. So that's definitely going to qualify for us. And this 20% QBI, this literally just knocks 20% off. You just take whatever the number is that you were going to be taxed on, and you just knock 20% off it right off the top. So if you're talking about $100,000 a year and you knock 20% off of that, well, you just knocked $20,000 out of your taxable income. So if you were going to pay, let's say, 30% on that $20,000, that's $6,000 that you save just by simply putting in there that you're a qualified trade business and you get the QBI deduction of 20%. That's a pretty big one. So, of course, there's a lot more, guys. This is not an all encompassing video, but this is the vast majority of the biggest and most common, as well as the most missed deductions for us small business owners. Another one I didn't throw in here because I just did a video on it is becoming an S-Corp. And I'm going to give you a very fast rundown on the S-Corp thing. Whether you are a non LLC sole proprietor, so if you never become an LLC and you're just a sole proprietor, or if you are an LLC, but you do not elect to be taxed as an S Corp. So either one of those, a single member LLC or a non LLC, those are both going to be taxed the same way. And the way that they're taxed is that you have to pay 15% is about what it comes out to for FICA. That's your Medicare and Social Security. You're going to pay 15% of that. If you made $100,000, you paid all your business expenses, and now you've got $100,000 as a sole proprietorship, LLC or non-LLC. That sole proprietorship's going to pay 15%, so that's $15,000 per $100,000 on FICA taxes. If you elect to become an S corp, then you give yourself a salary. So maybe your salary is $50,000 instead of 100. You get that $50,000, you pay 15%, same FICA taxes, but only on that 50,000. And then the other 50,000, if you're an S corp, all the money that you distribute to yourself from the business above and beyond your W2 earnings, the 50 grand, all of the rest of that, so that other 50 grand, that is not going to have FICA taxes involved. So you're going to save 15% on that 50 grand. Now you are still going to pay regular income taxes, but not FICA taxes on that portion. So you guys do me a favor, because I know I'm not a tax expert, and I want to remind you also, by the way, I'm not a tax expert. This is not tax advice. But you guys do me a favor, and if you have other tax savings that I didn't mention here, go ahead and drop them in the comments for everybody to scroll through. And if I see some good ones, I'll do another video soon and go over even more of these deductions. But for now, I love you guys. I hope you're all out there killing it, and I'll see you on the next one.